Okay, you're with us here on a fresh new edition of Trading Hour. It's a Friday morning. The market is off the lows by quite a bit. There's about a 5-odd point cut on the Nifty. The Bank Nifty is also come up from the lows, and similar is the case for the broader market as well. I mean, if you take a look at the day's low for the Nifty, that is, we were at what? 11,769, and from those levels we've come up to about 11,848 or so. Yeah, I mean, so this is, I mean, quite a bit of recovery which has come through on the indices. We're basically tracking about a 0.5% odd cut for the week so far. This is Friday to Friday, and remember there was a market holiday today as well. So I mean, it's not even though we had a pretty sharp sort of surge early in the week and a pretty sharp sell-off yesterday, I mean, on balance, on a weekly basis, it's going to go down as a tepid kind of a week, but lower so far. There's, of course, the rest of the trading session left, and we'll see what happens. I think for most parts, the focus area, like yesterday, remains financials, and I think that is where most of the concerns and talk and chatter is sort of coming out from. So NBFCs, HFCs, and private banks included, pretty much really bearing the brunt of everything which has been happening in that particular space. Ekta, morning.
Hi Prashant. Yes, absolutely. You said tepid, and it's definitely a tepid day of trade today. We have the mid caps, however, which have recovered from the day's low. So there's some amount of recovery which has taken place there. But the Bank Nifty also just about marginally outperforming with a gain of around 0.4%. In terms of stocks in focus, there's definitely this news flow which is much more negative for stocks, it seems, Prashant, than positive. So for example, we've spoken about DHFL ad nauseum, but something like a Manappuram also, which is down around 2.5% on news reports with regards to a possible insider trading case. No clarification from the company as yet. Or even something like a Eros, which is down with regards to the default. So it's down for the second day in a row for Eros. So down around 13%. And Indiabulls real estate, where we've been discussing that big deal that took place. So that stock up around 1.4%. So more in terms of negative news flow, stock specific, it seems at this point in time, as opposed to positive. But nonetheless, we have Mitesh Thakkar now joining in to talk about the technicals of the market. Mitesh, hi, over to you. What are you recommending this Friday? Overall, it's been quite a subdued week for us as well. What would you recommend specifically today, as well as stocks?
Good morning, Ekta. I think on the index, today's low is very important. You know, when we were going up from the lower levels, 11,750-790 was a level which took a lot of time for the index to get past, and that zone is now acting as a support area. So if today's low is in that sense held, I think we could be in for a couple of days of consolidation between 11,760, 750 on the downside, about 11,900, 920 on the upside, and post this consolidation, there could be fresh attempt to get past the 12,000 mark. Keeping that kind of view, I have one buy and one sell right now. I have a buy on Voltas with a stop at 595 for targets of 630, while Amara Raja battery is a sell. Keep a stop at 635, look for targets of 605.
Do you have a trade running on IndusInd, Mitesh?
Sorry, can you repeat
IndusInd.
that?
Do you have a trade on IndusInd?
IndusInd Bank, not really. I think, it's been extremely choppy, and I don't think there is a proper trade setup which will give me a good entry point for the timing. So avoid IndusInd from the trading point of view.
You look at Edelweiss for a bit and tell us where is it. I mean, this is down almost about 15% in the last 3 trading sessions. Yeah. Go on.
So 2 things. One, I think the stock has hit some important medium-term moving averages around 175 mark. To intraday low is below that. I think in case we don't close below 175, chances are that it will possibly mark today's low as the short-term bottom, and then could bounce back to about 190, maybe even 197, 198 on the upside.
Mitesh, a lot of the pharma stocks are declining today. Dr. Reddy, Cipla, Sun Pharma, even from the broader markets, Aurobindo. What would your strategy be on them?
To be very honest, I think pharma has been a sector which has been beaten down, and I was not expecting a fresh breakdown and again more declines. But the chart patterns in the last 2-3 days have clearly suggested that the short-term bias is negative. Would be looking at shorting them. Cipla, I think while it's been one of the strongest shares in the last few weeks, but I think now showing signs of a decline and a pullback to about levels of 530 to about 525. So from a trading point of view, about 7-8 point kind of stop loss can be taken. Similarly, I've had a sell call on Biocon today in the morning. That's also possibly restarting a downtrend. Looking at a retest of recent lows of 510, 505 zones again could happen, and fresh lows could also be tested. Aurobindo has been on the sell list for last 2-3 days. Today I have not put a sell because the stock has already started declining a bit. But I think Sun Pharma could be the one which could possibly join on the negative side. The stock has been making fresh lows, but it had a low of around 398 on the 13th of May and is recovered from those levels. So in case this 398, 395 zone breaks, expect 375 to be tested.
Okay, well, just want to point out that Aurobindo has recovered a little bit. Remember, it's down around 15% this year, so it's been seeing some amount of down days post its numbers. It's up around 0.5% today. But we have a Twitter query for you, Mitesh. Shakti holds 900 shares of NCC at 114. He wants to know if the stock is a good long-term bet.
Which stock is that?
NCC.
NCC. Okay. See, NCC, I think, the only worry was the recent government change which happened in the state and kind of, led to negative this thing. The medium to longer term charts are more of sideways. I don't see much of declines happening over here, but it might not hit the upper end of the range or his buying price in the near future. I think it will do a range of about 90 to about 85 on the downside to about 115, 120 on the upside. So I think, if you can add more around this 90, 85 zones, keep a stop below 80, get his average price down and on the bounce back try to sell around 115. I think that could be a good strategy.
Okay, so that's some advice coming in from Mitesh as far as stocks are concerned. I mean, actually, the index is absolutely flat. Let me just see if there is any activity anywhere. Real estate as a pack is doing well. It's up about 0.6 odd percent. Private banks as a pack is up about 0.4%, but these are mild recoveries after the smackdown we saw yesterday in that space. Bank Nifty itself is up 0.36. The metals index is up about 1/3%. Go down the list, small cap index is managing about 1/4% odd recovery at this point. What is down is the pharma index, which is down almost a full 1%. The media index is down about 0.4%. And you've got the energy index, which is down about 1/4% or so. But let's just quickly come back to the real estate pack and just talk about that for a quick bit. The big story, of course, has been that Indiabulls real estate promoters have sold some stake to the Embassy Group this morning. The company is set to focus on the financial services business. So we spoke with Ajit Mittal, Group Executive Director at the Indiabulls Group. Here is a slice of that particular conversation.
You'll confirm to us this block deal that we had in the morning on Indiabulls Real Estate. Is that stake sale that you have done or the Indiabulls Group has done?
Yes, that's part of the promoter stake sale to the Embassy Group.
To the Embassy Group. Okay, so can I ask you this price of 140 rupees per share, because a lot of people believe, going by the price behavior of the stock and intrinsic value, that of course its previous high was 250 rupees. That it's being done at a bit of a discount to what's perceived as the market value or as the intrinsic value. Is it to sort of hasten the process of getting that merger through, the LVB merger? Was that one of the conditions from the RBI?
I must confess that was the chief motivation. See, our group has predominantly been a financial services group. Real estate was a later day entry. So we want to focus on the financial services part. And for us, the evolution into banking is the natural frontier.
That was the chief motive for you to sell a stake in Indiabulls Real Estate. Was this official demand from the RBI that you must get out of real estate business before a merger can be approved?
There's no such official demand from the RBI, and there never is. So I know that there is a distinct uncomfort with the regulators worldwide, not just in India. When the promoters of a bank are also involved in real estate. So I mean, we can see that, and last time in 2013 when we made our application for a banking license, that time also it was a bit of a concern. And for us it made sense, as it is real estate business for us was minuscule given the overall presence we have now. We're getting into insurance businesses. We are also into digital lending. We have one of the best fintech today in the country. We are by far the second largest mortgage company. So given that scenario, the natural corollary for us was to do this. And yeah, this was a bit of a sacrifice, I would say.
Okay, Ajit Mittal also told CNBC TV18 exclusively that the chief reason for the stake sale is to get the Lakshmi Vilas Bank merger fast track. He expects it to probably go through in the next 9 to 12 months.
So what's the next step now? Have you gotten an assurance from the RBI now that the real estate business has been sold?
No, there is no such process of getting assurance and all. It will happen when it happens. That process is underway. So they'll have to carry out a fit and proper, due diligence on us and the promoters. So that's it.
When can we expect the merger to go through?
Well, going by the past precedents, there's in all maybe 9 months to 12 months timeline or time horizon you can look at. Post RBI NOC, we have to also go to NCLT's Competition Commission, which we already engaged with them. Exchanges, SEBI, because both the companies are listed. So there's a long process, but that process has been kick-started. So we are already, that process is underway, and we are engaged with the regulators.
Okay, we also, by the way, spoke with the embassy group, and we will play out those sound bites in a bit from now. Let's move on. I mean, the big story essentially remains from the NBFC financial services space, and I mean, the DHFL default continues to haunt that sector. The stock itself, the DHFL stock itself, continues to trade lower. Abhishek is here with some data on essentially exposure to DHFL, bank-wise exposure, really. Abhishek.
Well, Prashant, Morgan Stanley had come out with a note on 5th of June. They mentioned that, lenders' exposure in DHFL. Now, this data is of June 2018. SBI has an exposure of about 8,800 crores. Bank of Baroda has about 4,500 crores. Bank of India about 3,560 crores. Union Bank about 2,500 crores. But if you look at the, secured and unsecured debenture holders, one key name that marks out is Yes Bank, which has an exposure of 3,700 odd crores. So overall, the top 5 bankers are SBI, Bank of Baroda, Bank of India, Yes Bank and IndusInd Bank as well, which has an exposure of about 1530 crores to the secured debentures of DHFL. Back to you.
Okay, all right, Abhishek. Thanks very much for that. At least IndusInd is managing to hold up today, up around 1.5%. But remember, it's had quite a down week. It's down around 3.4% on a week-to-date basis. And maybe even Yes Bank should come up for you. No such luck for Yes Bank, which is in the red. So down around 0.7% for Yes Bank and down around 4% for the week. SBI also just about managing to hold its head above the water. We'll take a break, but up next we'll discuss